What is going on, guys, and welcome on into the live. I figured I had some time, so I figured I'd just go live to finish out the day. And this is absolutely nuts that we're seeing right now. And I think it's safe to say, and we'll dive into some examples here. It is safe to say that the bubble's popped. Okay, and what we mean by that is that right now we are seeing what we're seeing right now in the stock market is a complete flush completely across the board, a flush of all retail traders that thought it was easy, that made a lot of money, and that did quite well over the past year, right? 2020, early 2021, really mid-February was the point where it was like, it's over. We can actually find it and dive right into that exact point, that exact spot in mid-February, which we will do in just 1 second, but it's insane. And then that said, the volatility has been absolutely just, I have honestly haven't seen anything like this since the crash. And then pre that, I mean, it's pretty, I don't know, you have to go back, then you start going back farther and farther, and it's like, okay, how much do I really remember at this point, right? So this is nuts. Look at as we're here right now, and of course this will stay up so you can come back and watch it after the fact. It'll be good to watch over the weekend. Maybe we'll do a live on Sunday as well. So stay tuned for that. Make sure you subscribe if you're not already. But just the market's going down, right? We see SPY opens up here at 460. Okay, and it pulls down, it goes down like $12 intraday, which is like wild volatility as it is, right? It was opening up and now it's friggin' crashing down. Now we're seeing SPY ripping into, or at least it's trying to rip into the close as it has hit the lows of the week, okay, which is actually kind of interesting to look at. So we broadened things out. We briefly got down to this level. 450 was a key, line in the sand. We went below that, thought the waterfall, it was going to be complete destruction on SPY. Thought we're going to go down to 445, something like that. And now we're ripping into the close. Right now, we are pushing up into the close pretty hard. So we'll see. We still got over 30 minutes to the close, so we'll see if this holds up. But from, it looks like we're up over $2, in just like 10 minutes. So it's pretty wild to see that. That said, there's a lot we got to dive into. So I want to pull back and I want to go back to kind of when this kind of all began. And show you that we haven't really seen what we're seeing right now on SPY. I have a call, kind of a speculative call for next week, just in case we get a crazy bounce. So that's kind of my at least speculative idea. But that expires end of next week, so I got some time on that. If we get a bounce and things up 20%, 30%, I don't know, I'll probably just take profits on that, and that's it. Had almost all my portfolio in UVXY at an average of 18. So see, like, the thing is, that's exactly the game that we play, right? So this is nuts. Now UVXY is up massive. It's up 18% today. I mean, it's not up like it's a good bit, but it's been grinding ever since it kind of started pop and drop, and it's been kind of pushing up. And usually, right, these pops are followed by a quick drain in volatility. We actually haven't seen that this week. So this week, each spike in UVXY followed by a pullback has been bought up again. So we're seeing higher lows on UVXY. And this has probably been a decent trader as well. For those who've been playing that, or maybe some people have been trading the VIX. I know people have been trading the VIX, VXX. Those have been good opportunities to take advantage of. They've been respecting their levels pretty well. So one of the levels to watch right now on UVXY is roughly about $20.30. So we've been holding that. So once we fall below that, it probably bleeds out unless there's some news that drives the market. Now you can say that this is all due to the variant and the virus and all that stuff. I don't think so. That's just a headline. That's just kind of the headline, the piece of news that is going to kind of cover up the underworkings of what's going to happen in the market, which is ultimately not up to us and retail traders. Obviously, that's going to do what it's going to do. You go through cycles, you go through all that stuff. So that's kind of what we're looking at right now. Comms has gotten absolutely destroyed. It's under $1, right? This thing has gotten absolutely destroyed. Last I looked at them, last earnings report, I believe they were fairly low on cash. So I was kind of interested in potentially shorting a spike. I never actually did. I was looking for a spike up into that like $2-ish area, kind of what we saw back in here. So that's kind of one of those examples though. And I think we're going to see a lot of this. Now, some stocks will be better than others, right? Comms, I don't know. I want to look back in, obviously, I think I remember the last earnings report, but I have notes somewhere. I'll go back and look if I want to take a shot at it, or at least dive into it, as a possible opportunity. But it's down 10% today. So a lot of these stocks across the board, they're down 10%, they're down 8% for no reason. SoFi, I think, is down like 10% today as well. Let's take a look at SoFi. Now, market's bouncing back. We'll see that. It's super wild. I'm actually really curious to see what happens in the close. SoFi, I started a position with a 1250 call, expires in 2023. I figured that the range SoFi has been in, anytime under 15 has been a buy. So I started to buy that. I will buy more if we do see more downside. Could we? Maybe we'll see some more downside. SoFi is an interesting one because I thought we were going to see for the most part, we're seeing is more downside across names that have been down. So if it's been down, it's down more. And why? It's because of tax loss harvesting, because people who are down on positions that they may have been holding, well, you may as well cut it, realize the loss, pay less taxes, and then enter it again at the end of the month or next year, right? If the stock is still relatively low, or, still, you may, let's say you're in like a DraftKings. This thing has been just absolutely destroyed, like Cathie Wood, right? Absolutely destroyed here. So let's say you're Cathie Wood, you're in DraftKings, and you are like, you know what, this thing is just getting destroyed right now. I'm down. It's been down, the past couple months. I entered this position. Let's say I entered it like $50, thinking that this support would hold, and I'm looking I was holding for the long term. Well, maybe I'll just trim this out. I'll just cut my bag on DraftKings. It's down 10% today. That's insane. I'll cut my bag here, and it's in the 20s. I'll realize this fat loss. I'll have less to pay in taxes, or it'll show that I lost money this year, or whatever, depending upon, your circumstance. And I'll just rebuy this thing, in a couple weeks, or I'll rebuy this thing in January, whenever I want to rebuy it. And then, I'll be able to get a nice average in the 20s, and I'll look to ride this thing back up, or play it for the long term, whatever I want to do. And then I'll look to capitalize on some nice moves over the next couple of years if that's my plan, right? So that's kind of the idea behind why a lot of stuff that's been down is getting killed even more. But you're also seeing the high growth, the speculative names getting destroyed across the board. So look at some of the top losers for today. DocuSign, look at this thing. It's just absolutely obliterated. This thing was a massive growth play, and it held up, pretty well over the past year, right? 2021, it kind of dipped down early, but it got up to 315. We have a double top at 315. They had earnings, and I think they cut their guidance and whatnot. But look at some of these options. This is the most insane thing I've ever seen. Look at this. Look at some of the puts. Now, they have made a move today. This percent change is showing today 11,000%, 8,000, 9,000%. So some of these puts that were out of the money yesterday, now we're deep in the money. And you could have probably bought these things for cents, a couple cents yesterday. And now they're deep in the money, and you're up massive on these puts. So that was just insane to see on DocuSign. So you're seeing a lot of more plays like this. A lot of companies are cutting their guidance and whatnot. So that's kind of what we're looking at. Small cap massacre. Here's the thing. When it comes down to it, I expect, to be honest, I have no expectations for any of my small cap plays until the end of the month or until 2022. I really don't. So as long as you kind of have that in your head, I think it's fine to buy dips. I mean, I've obviously mistimed a lot of stuff, but you can never time things perfectly, right? So there's a lot of lessons to be learned. I've mistimed a lot of my entries on small caps, but it is what it is. If you cut it and move on now, you take the losses and you can't capitalize on the way back up, because there's a lot of opportunities. As I think I said in yesterday's video, like, this is going to be one of the craziest, I think, opportunities if you're smart and if you're still here, because there's going to be so many stocks that got absolutely obliterated, where the stock and the company, right, is going on a completely different trajectory, right, than where the stock price is going. And so those are the opportunities. Now, a lot of small caps are worth nothing, right? They really shouldn't be worth what they're worth. Now, across the board, though, take a look at some of these companies. I mean, one of these is CEI. It's getting absolutely killed, right, from its massive run. Honestly, it's holding up better than I've expected, right? This thing was down in the 30s, and it pushed up, and now it's pushing back down. We can look at DATS really quick, too. Also a popular retail play. Look at DATS. Absolute obliterated. Like, this thing was just up in the teens. Now it's back under 4. Just wild. I mean, wow. It doesn't matter. I don't even know the fundamentals on DATS. I have no idea. Haven't looked into it, to be honest. But I mean, like, that's just a nutty move to the downside. But we saw this exact same thing to the upside. I mean, look at some of these stocks. One of the small caps I have, I'll just pull it up. You can see I have some orders set on this thing. It's NSPR. So NSPR was actually an interesting play, because last year, this thing went on let me zoom in a little better. This thing went on a nice run, right? So it was holding up around $5. They did a reverse split. So it was really in like the 45, 50 cent range, something like that, right? Holding up just under $5, and it went on a crazy run, pandemic run, right? So obviously the thing went up wild, up 300%. Okay, great. Now the thing was already down. So if you go back, and this thing actually hasn't been getting hit that bad. The thing was down pretty big, right? Since that push, it already hit pre-lows. Like, it hit lows that were post They did a reverse split in there, which happened, I think, in April. But the thing went pre-pandemic lows. Now it's just holding even lower. And a lot of these companies, you'll notice, are actually doing better financially because they took advantage of these opportunities to raise capital and to raise funds. And now they're, acquisitions, marketing costs, expenses, and whatever they had to get their products on shelves or to expand their research, whatever. So you're seeing some of that action. Let me see one more that I had to pull up. There was another really going. Okay, oh, here it is. NBRV is one that is trading significantly under cash right now from the last earnings report, which is one that I want to add heavier once probably towards the end of the month is what I'll do because of the tax loss harvesting. But this thing obviously got killed the whole year, right? So this thing started up in the threes and it was down around $1, right? Within, within the end of the year, right? Within October, August, September, it was down. Now, the thing has already been down, right? A good bit this year. Now, maybe there's no value here long term. I don't know, but I'm playing it for the spike. The thing has been down. Look at this from the push. Now, the earnings report wasn't actually terrible from what I looked at. It really wasn't that bad. But from that point, it just so happened to be that the market just went on and flipped, not a flip on a dime, but the small cap market just got turned around and went just straight to the gutters. From that point, the thing is down over 50%. I mean, it's just insane. I want to get another ad. I can probably double down on my position at some point. I would love to get it in the 60s, maybe even the 50s if we can, which will bring my average down nicely. And I think a pop to $1 plus is certainly in the cards. It's done it before. So that's kind of what I'm playing on some of the small caps. But you got to be careful because not all these things are going to pop like that. And you kind of have to have a feel. So some of them I've cut. Some I have a feeler on there. Some of them I hold a little heavier because I have a better feel for them fundamentally. And so I'm more confident. But, across the board, you're just seeing just mass destruction in small caps. You gotta be careful. SPY, this is actually, I think, is nuts. Look at this into the close. Look at this. I mean, SPY, we thought it was going to, it went down below Wednesday's lows, and now it's going to rocket into the close. If we finish, something got filled. Let me see. My SVXY. Oh, yeah, look at that. So I bought these, I have these SVXY calls. I had 5, just as kind of a speculative rebound in volatility is going to kind of subside. My kind of guess or my bet for next week, it's an educated bet. We'll talk about that too in a second. But so with that coming down, this has been beaten down. SVXY, I'll show you. I have these calls. They're very low volume, so it's not like you can get that many. I usually like to play shares, but this way I can kind of play the options because they had a little more volume than other ones. These contracts specifically. Look at this thing. SVXY ripping into the close because the market's rebounding. It's kind of stabilizing. Well, it's not really stabilizing, to be honest, but it's rebounding. So volatility is kind of fading out pretty big time. Massive trade for someone who's playing the backside of volatility right now. But I bought some at like 75, and I just had one get filled at $1, and then I have an average at 140. So if we do see a pullback again next week, I'll add into these. These expire on the 17th of December. And so I'll show you exactly why I like them. Because if we take a look now, of course, this time may be different, but look at this. Every time we spike down hard on SVXY over the past year, now of course this time could be different, over the past year, we've been bought back up in a pretty quick fashion. Now, of course, here's the pandemic crash. Obviously, volatility spiked. This is the inverse, so it goes down. Now, every time we have these wild crashes, yes, it's followed by a pretty big bounce back within a couple of days. So my guess was, okay, I'll give myself 2 weeks, 2.5 weeks when I started buying these, or 2 weeks on these options. They expire in 2 weeks from today. And my dad's in it too. That's why he's texting me. But these things, he was buying like literally like an hour ago, and now he's up probably pretty nice. But this thing comes down 48, just under $49, and now it's bouncing back up. It's at 51. But if we get a rebound and the market doesn't have to go up, if the market kind of stabilizes and kind of jostles around or kind of slows down the volatile ups and downs, this thing can be back up into the upper 50s and not be at all-time high or not be back at the highs, so 65, but it can be back at like 57, 58, just like that next week, right? So that's kind of the idea behind it, and you can make a lot of money playing that backside of volatility. You can play puts on UVXY as well, whatever you want to do. But that's what we're seeing. MRAI. I actually been hearing, was this one I've been thinking is a Twitter, fairly popular one on Twitter, right? But it's actually rebounding pretty good. So holding up the portfolio, look at that. Nice. But these are recent IPOs. I think a lot of people have been playing the recent IPOs quite a lot lately. They've been doing pretty well. Look at this. I don't even know. I honestly don't even know what happened. I played this one for I saw this earlier today, so I played this little scalp. I bought it 102 on AVCT and I sold it like 105 and it hit like 107 and now it's back down. It hit 91 cents, down 35%. I don't even know. I think they have I think they did an offering at like 145, if I recall from looking at the news earlier. They had good news yesterday, tried to pump the stock, I think, and then immediate offering. So it was kind of like your classic penny stock, right? But unfortunately, the market conditions were not really good for a pump or, for this thing to pump, for them to kind of get more attention on their stock, but it got destroyed. Whew. Have you seen DraftKings? Yeah, I mean, it's absolutely insane. Here's the thing. DraftKings is one that I personally like. I like Penn over DraftKings. That's just kind of my play. I'm waiting to get one. I'm going to buy another Leap on Penn. I'm probably going to do that at the end of the month. So that's the plan. But DraftKings has also been beaten down just tremendously. It just has. I mean, look at this thing. It's just absolutely killed. I mean, if you like it, if you think it's a longer term play, then this is an opportunity to add. And that's up to you. But that's that. Lucid, look at this. Lucid actually kind of rebounding. I had a short on Lucid, like a little bit, probably bigger size or much bigger size than what I have now. But I think Lucid comes back down to like the low 40s. I think it easily does. It might come down more. Personally, I think it's, I wouldn't want to buy Lucid until it's under $30 if I was going to buy it long term, right? So if I would definitely, if I had a position, which I don't, I kind of missed the boat there. I regret not taking it in the teens, in the IRA or something like that, right? But now on Lucid, this thing has come back. I want to see it come back more. And I honestly, personally, based on the current conditions in the market, I don't want to buy this thing unless it's under $30. I really don't. So I've been kind of buying back some of my short every time it pops and then kind of re-shorting and then kind of covering into the dips. And that's kind of the plan, at least on this one. So we'll see how that plays out. If it goes back over 50, I'm going to get out. Obviously, I'm not going to let this go, red on me, the short, but that's the idea there, at least on Lucid. So yes, nuts, absolutely nuts. Worst day since March 2020. I mean, it's part of the game, but here's the thing. When you have to understand too that, and I was seeing some stuff by some people on social media like last night. So I forget exactly where I was seeing it on Twitter, but it's people who've been in the game for, much longer, probably double the age of me, maybe even, who knows, triple, I don't know, 23. So I guess there could people who are like 3 times my age technically that are, still, kicking on social media, I guess. But people, who have a lot more experience, the game is this: if you're not willing to hold through volatility, then you should not be able to accept or be able to at least be there for the big gains. If you don't have, I don't want to say the stones, right, to hold through some volatility or to at least weather the storm on some volatility, then, you're not going to be able to make kind of crazy money or big time money. So you can play it 2 different ways, right? You can be the person that's in and out, that's a day trader. So you look around, right, on social media and you're seeing all the people who are day traders are like, yeah, man, I mean, I was all cash last night. I don't know about you, but and you're like, oh man, why wasn't I all cash? And then so you go ahead and you cut all your bags only for that to be the bottom. And then now those will all run, 100% from where they are right now. And you at least could have recouped losses or double down on higher convictions, got your averages down nicely if you have cash available, and then ride up a really big, ride the wave back on some of these names that have gotten destroyed and make a lot of money next year, right? But a lot of people will probably quit, number one, or number two, say, you know what, I should just be a day trader now. And then they go to be a day trader and then they realize that that's even harder because now they're trying to get in and out, scalping and all this stuff. And to be honest, mentally, I think being a day trader is a lot better because mentally you're clear every night, right? You either did well or you didn't, and it's on you, and you can obviously come back the next day and reset. If you're a swing trader or you're someone who's a long-term investor, you have to look and you look at your portfolio every day, which is probably not healthy. Now, I'm guilty of it too because I want to see things and I at least want to pay attention and see what's going on. Because there's a lot to learn, and sometimes there's opportunities. You'll see opportunities, for a quick little ad. If you see a dip that you want to buy or a certain stock that, is doing something that you want to take advantage of, right? There's opportunity, right? But you'll realize that as a swing trader or an investor, you have to weather these kind of ups and downs and take advantage of when you have opportunities like I think we are seeing right now. We are literally just seeing a massive opportunity because the funds that made a lot of money, the big money that made a lot of money this past year on, let's say, large caps, or let's say they made a lot of money earlier this year on small caps, right? not everybody got short squeezed, like, whatever, Melvin Capital or whatever, Citadel, I don't know, all those guys, the hedge funds that got destroyed from GameStop, right? They made a lot of money. So what are we seeing? What are they going to do, right? They're probably going to cut some of their bags. They're probably going to cut things so that they can write it off against their gains, their losses, and then they'll be right back and they'll want to ride things back up and get a good start on the next year. So you're going to see, it's just the game. It's the game. And as you understand that and as you have more experience, you can start to take advantage and you'll see really good opportunities. And so personally, as much as I let's look at IWM. This is the Russell. It's getting killed, right? But it's kind of in range. I have one call out for 2023, so we'll see if that plays out. I don't know if I want to add another one because personally, I would rather just play the individual names. You're probably going to see more upside on individual stocks than playing the indices. Now, I think IWM does great, but what if 2022 is a year where the S&P is down 10% overall, right? Well, IWM, maybe it outperforms the S&P. Maybe it's like flat. I don't really want to kind of be in this thing if it's just flat, right? So I'd rather play the names or the specific stocks that have been destroyed, ride those back up to kind of their fair value to some degree, right? Or to, ride them up for their kind of rebounds instead of necessarily playing the indices, which you're subject to the broader markets, the world news and everything that kind of goes on. So, while this may be like flat, let's say the S&P is flat, tons of individual stocks will be up and down. So there's opportunities across the board there. So that's kind of the idea that I have on the small cap side of things going forward. So we'll see how that plays out. I would really like to see though on SPY, the S&P, here it is. Let's take a look at how it's finishing up the day. So it rebounded really hard. Now it's pushing back down. So I could probably rebuy that SVXY that I just sold if I wanted to. If it flushes hard to the close, I'll do it. But I'm going to leave the 4 that I have into next week and look to rebuy if we have a dip on Monday or Tuesday. But on the S&P, right, I would like to see that after this kind of crazy volatility, I really hope, right, but who knows? And it would be a logical kind of thought process to think that with this crazy volatility that we just saw the past like 2 weeks, that maybe the volatile times on the S&P are kind of over for at least who knows how long, right? And maybe we kind of see the S&P, the overall indices, the market, right, kind of just slow down in terms of its uptrends, in terms of its downtrends, in terms of the volatility. You just see the thing just slow down and consolidate for a while and kind of, hover around 450 for a couple weeks, couple months. If we see something like that, then things stabilize and then playing the individual stocks becomes a lot, I don't want to say easier, but the game becomes a little bit, at least, I don't know, it's somewhat easier to follow, right? Because now if a sector's hot, it's fairly easy to kind of jump onto that sector and you don't have to necessarily worry about all of a sudden the market's just crashing, right? Now, is the market really crashing? No, it's not. It's down, whatever it is. From the all-time highs, we're down, we hit down 5% today. It's not that bad. It's not bad at all, right? We're not that far off all-time highs. But the crazy volatility, the crazy swings, you see things are up 1 second, then it's down. If you're in a day trade or if you're in a swing trade, the idea might make sense. The stock may be undervalued. The news flow may be positive, right? It may be running with other stocks. But if in 2 minutes, all of a sudden the stock market is down, 2%, which is kind of the volatility we're seeing, it just destroys your play. It destroys your technical supports. Any trend that you've been following, it's done. It doesn't matter. So that's kind of what we're seeing. So technicals are like out the window across the board on any small caps. That's just what we're literally seeing, right? When this market's this volatile. So it doesn't matter. Some of the airlines, though, I think actually are respecting really good levels. Let's take a look at AAL, American Airlines. And actually, this is actually getting hit pretty hard, relatively speaking. Let's see if we can find like Jets. Let's see if how Jets is doing. Yeah, for the most part. So we had a level of support on Jets. We had right here, came down to 21, like 25-ish or so. And now that's a resistance. So we kind of dip below and each kind of pop back up that we tried to kind of relief bounce on Jets, on the airline, some of the travel names. All of these relief bounces have kind of gotten stuffed up around like that 20 to 21 range. So these are kind of holding below that level for now. So you need these things to kind of break back up, fill that gap right there and get back to the upside and reclaim those prior supports now that are new resistance. But again, the sentiment hasn't been there with the virus kind of narrative going on and the whatever, right? The sentiment has not been there for a lot of the travel sector to come back. And so that's kind of what we're seeing them kind of getting held back, which is fine to me. I mean, as you guys know, I don't want to say like heavily, but I'm decently in on some of the airlines into 2023. So I think next year will be a big rebound year for them, but we'll see. Let's see. Let me go back through some of the CFVI. Mara and Riot got destroyed. They are getting absolutely obliterated as well. Here's BTC. Let's pull up BTC. Bitcoin, 53. It's trying, but it's not. We'll see if it falls below this 53 and holds below. We might be seeing 40s again. We'll see though. I wouldn't be surprised if we're seeing that. So Mara and Riot are coming. The air is coming out of those because they have been getting played with the market. So I have kind of noticed that Mara, at least to some degree, was almost leading Bitcoin a little bit over the past couple of months, and now it's plummeting. Market has been red, choppy. It was trying to hold up around the upper 40s, and now boom, plummets. So I wouldn't be surprised if Bitcoin, pulls back over this weekend, especially with the volatility in the stock market. Who knows? Generally, we're seeing that when there's volatility, the stock market's down. Bitcoin has generally been down. Generally, we'd like to see that kind of change, but that's kind of what we've been seeing. In terms of the bubble, yeah, so essentially what I mean by that is we had all these retail traders, all the retail new investors in the stock market, right? With the pandemic, everyone was home. Everyone's kind of saying, oh, yeah, I can trade stocks and we'll see what happens. And their stimulus check and they make a ton of money. And then they're like, oh, added the money options on Robinhood. Oh, yeah, it's easy. And now you're seeing a lot of the popular retail, we'll go to AMC as a perfect example. Popular retail names. AMC surprisingly held up pretty decent, ever since it got the second kind of win or the next big run in May, June. It held up decently, right? Every time it dipped down to 30, it would bounce, and we'll see if it bounces again from the upper 20s. Actually, it came down to 25, 22 or so, it looks like today, so that was a pretty decent dip. But we're kind of seeing a lot of charts look like this. Just the floodgates are opening and they're pulling back. Let's go to GME, GameStop. Yeah, not as bad, but GME looked decent. It looked like it wanted to go for another round, and then it got just hammered past couple weeks. But yeah, the floodgates are kind of open in terms of retail traders are getting destroyed right now. So the buy and hold, the penny stocks, the small cap plays that would go 10x or that would go 100%. You're not really seeing that. You're seeing selective names kind of doing that when the market's somewhat stable, but for the most part, we're not really seeing that. But across the board, they're all hurting. We could just see it. Go look at like some of the channels. Like there's been some channels that were like recently started since the pandemic that were strictly stock related channels, or even just go to look at stock related content online. You go to like Social Blade, you can see like how many views like on average somebody gets. They're so down. And what that tells me is that there is no interest. And so when there's interest, people are trading, they're investing, they're trying to play in the stock market, they're interested in learning, right? Now the views are massively down on a lot of those kind of bigger stock related channels. And so what happens is that you're seeing there's no interest. The interest is not there. Doesn't mean that there's not opportunity. Doesn't mean that necessarily the people are all, everybody was right. You could be right taking whatever you wanted to do, a year ago. Now you have to adapt to the new market conditions and kind of maneuver a little bit differently and play the game a little bit differently here, which is kind of what we're looking at. And so people aren't going to be as, it's not as easy, I would say, to be right. I'm going to snag another 100. I honestly have been I'm just going to market by this, slowly accumulating more VISL. I was able to, and as I say, always sell spikes. I was actually not on Wi-Fi. I had no service, none of that. I was like in the woods in Pennsylvania. I went back to a Penn State game, which is where I went to school. I went back, which was on like the 23rd was the game, right? Because this is the 25th. This is a Monday. And we came out of like the woods. We were like camping. And we came out of the woods and I see VISL is up. And so I had an average like roughly around 2 at the time. And so I took my profits, or I took a good chunk of the position off on that spike. There was some news circulating about Apple and drones, and VISL is kind of tied to drones in a sense. And so it spiked. So they also had the earnings report, and they had a nice earnings report. It also spiked again. I'll go to the 4-hour chart. I'll show you that. It spiked again on the earnings. I took off like a little bit of shares there. But when we get a spike like that, I always take something off the table just because you never know what's going to happen. And it's a small cap and it's a penny stock. And so there's the risk. And so because of that, right now I'm able to rebuy and I'm able to bring my average down. I really want to kind of hammer this. to some degree and hammer this with probably double the share size at some point. But I'm not going to do that right now because we're still early December. We're still kind of in the midst of the tax loss harvesting season, and we're kind of seeing a lot of stocks that have been down or going down more, and the market's super volatile. So I don't really want to mess around too much and go heavy into anything like that just yet, but I'm kind of nibbling. I'm nibbling a little bit here and there, and then I'll add a little bit heavier size, bring my average down ideally to like that 150 range, and I think it's grossly undervalued right now at 130. I think it really is, but market does not care about that right now. So my style for a lot of small caps, at least right now, has been a little bit less technical and a lot more fundamental, and just kind of playing the game of the market, right? Playing the flows. So when everyone's selling, everyone's kind of hitting that point of, I can't take it anymore. I want to get out. I'm done. That's where I want to be buying more. Of course, you never can. I thought that was kind of already happening, and now it's happening on an accelerated pace. So you can't time it perfectly, right? That's the market. That's the stock. That's the whole game of the stock market, right? But there should be really good opportunities. That said, so it's just a lot to talk about, right? We got a lot going on, but that's kind of what's just been happening across the board. So, Docu could be a good deck at balance for next week. The thing got destroyed. I mean, let's be honest, down 40%. This thing, I thought about it too. I thought about because the market conditions, like, this thing got killed on earnings. I'm like, what about puts? Sorry, I got scam calls. I'm like, what about puts? Into the open. What if you just grab some puts? And if you grab puts at the open, you would have made a ton of money. I mean, the stock from the open, is down another 13%. I mean, on puts, you would kill it. You'd really just kill it there. Look at this. Look at S&P, right? We may end up closing. We still got 7 minutes. We may end up, look at this. Look at these bounces. My Weeble's going wild here. Let me just go back to this. Look at some of these bounces that we're seeing. Just wild moves. We're seeing the thing dumps under the 450 was the line in the sand, right? That was the low of the week. We dropped below, but we didn't drop below and panic and everything was like, oh my gosh. We dropped below, kind of went down and then recovered. Drop below, recovered. Drop below, little lower, low, recovered, right? Every time, lower, low, recovered. Now we push up and it looks like into the close, the S&P is not even going to be down 1%. It's down just over 1% right now, but we'll see. We got 6 minutes left. Does the day end down over or under 1%? That's the question, right? So we'll see. mRNA, I shorted that one too this week a little bit. I missed the puts. I shorted Lucid and mRNA, just shares. And now my next step is to take advantage of options a little more, which I have been dabbling in a little bit more. I haven't done too much. To be honest, I like shares, but when small caps are like this, kind of it's like, well, what are you going to do? The China delist situation. Okay, my thoughts. I believe that Baba Baidu. Yes, I think. I don't know if they're all going to follow and delist. There's a ton of fear about that stuff right now. We'll see what happens. Personally, the bigger names there, I don't think they're gonna. I don't think they will. I don't think this is a massive opportunity to buy. That's my take on some of that. We'll see though. I mean, realistically have no professional opinion on Chinese stocks. I have no idea. So anything's going to happen. But personally, I thought about buying some Baba, but there's probably safer plays. So I didn't do it. But I thought about it. So if I had kind of a lottery ticket play or an idea, I would buy personally. But we'll see. Let's see. Bitcoin top is in. I think it might be. I wouldn't be surprised. I said, I think a couple weeks ago, I was like, Mara is going to be a massive short on the backside. It's going to be so good. I was ready to take this short, in 2022. I was like, well, let Bitcoin exhaust out, let it go crazy, and I'll take the short. And I said that when it was in the 80s. It just so happened that was literally the top. And I didn't take advantage of it because I thought, you know what, Bitcoin might pull back, but I think we're going to see 100K this year. And then Bitcoin, and now look at what's happening. It's gotten destroyed. So if the top is in, which it seems like it may, already the thing is down 50%. And I think Mara can easily go down another 50% if Bitcoin top is in for now, right? For now. But so that's kind of the danger, I think, on some of that. We'll see. I'm not, the Bitcoin expert. I have some, and I hold it long term, and that's really it. So look at this SPY. Look at what we were just talking, guys. I'm I'm not surprised, and here's exactly why. So look at this, rebounding hard into the close. So now we're only down like 0.9%. So if we look at the chart for the past couple of days, this bottom line, this little bottom line I have right here was the low that we hit on Wednesday. Bounced up, came back down, tested that low. It happened to be 450 psychological area, kind of a whole number, easy for, buyers to come in. Generally speaking, that's an area that's pretty strong support, those psychological levels. So this is a support level, and we break below that low of the week on a pretty red day. I thought some panic, and I think a lot of people probably thought puts, it's time to go puts, it's time to get out, it's time to short, whatever you want to do. And what happened? The market pulled back, it dropped $1 under that level. We didn't see mass panic, and it kind of held up, and now it's ripping into the close. So you kind of see an example, I think, right here, where you had the idea and you had most people thinking, oh, if we fall under this week's lows, the floodgates are opening, we're plummeting, market's just going downhill. And the reverse has seemingly happened. So we've bounced, $3-4 now, almost $5 from the low of the day. I mean, the high of the day was 460. We're nowhere near that, but we bounced really nice. So the short on volatility that I have is looking really good. But, of course, the risk was if we kept going lower, this is going to keep going lower. So I have SVXY calls at 55, and they expire in 2 weeks. So we'll see how that plays out. But I also have a SPY call as well. Are we green? Yeah, we're green. We're green by a few bucks on this guy. So I have a SPY call. I'll hold into next week. Maybe it doubles. Maybe it's up 10%. Maybe it goes down to 0. I'm not going to take a big loss on it at this point, but this also held its value pretty well when SPY was coming down. Look at this. Oh my. We're going to come back. If we finish up over 454, that's pretty impressive. Pretty impressive to me. SPCE, let's take a look at that. That's also, this is coming down. This is probably a spot that I think is not a terrible spot to pick it up, to be honest. It's coming down. It's gotten destroyed. This thing, I don't know. Maybe fundamentally it's not a great idea, but it seems like the news will kind of cycle back this one at some point. Space will get hot again, and then, they'll have their flights. Didn't they postpone their flight start dates or whatever? So that's why it's coming back, but it'll have its time again, and it'll probably catch again. Maybe it doesn't have the same types of runs that we see, but, this is maybe not a terrible opportunity to pick something up there on space. Kathy's getting railed because she buys downtrending oversold. She did. That's the thing. She made so much money, and now she does kind of buy a lot of the stuff. Let's see. Go to RK. Yeah, got destroyed today again. Now, realistically, guys, at the end of the day, too, you have to understand, she is a lot more. I want to say she's a lot more calculated than you may think. For some people, I think she's a lot. She is thinking about the longevity of these companies, and I think that this pullback is not something that she is. I'm sure that they're probably sweating it out, and they're probably not happy right now. But I don't think it's like that big a deal for them. I really don't think it's that big a deal, because when you go from a period of time where your fund, pre-pandemic was at 60, peak February was at 160, up 160%. You should probably expect a pretty big pullback. And now a lot of her names, a lot of her stocks, they pulled back 70% from the highs. A lot of her stocks, are probably sitting at decent spots to pick something up. Fundamentally, she's not just a technical investor. She's definitely a much more fundamental investor, and she's thinking about out for the next couple of years, not thinking out the next, 2 days, so we'll see. But there's the market close, and we ended up finishing the day really strong. Really strong. So this may be the what finally pops that volatility bubble in a sense, and pops or takes some of the air out of the volatility. So we'll see if that holds up. I want to pull up. Let's see. Let's go through. I want to go back to where we got here. Let's go back to Let's go to Open Insider. So this is taking a look at some of the insider buys over the past couple of days. So I always look at this at the end of the day just to see what's going on and see what people are trading, insiders of companies. And these are kind of penny stocks. So we're kind of seeing the small caps that are getting just annihilated, right? Who's buying, what's going on, and see what kind of we can take from some of this. So we're seeing, this is a big one, $1 million shares were just bought. That's pretty big. A $2 million order, or $2 million size on AESE. This is actually held up quite well. Look at that. Let's go to the chart on AESE. So let's see. AESE. and it's at 191. I remember this thing. Yeah, this actually, it held up. Look at this. It's holding up really well. So there may be a lot more here. It kind of bottomed out 150s. That's your risk. This could be one of those that has held up quite well. All the dips are getting bought up over the past couple of weeks. They're literally all getting bought up, all these dips. And now you're sitting at a point where this could be setting up for a 2+, a run to 2+ pretty easily. So I don't know. I like looking at some of these things just to see. Okay, so one that I also want to point out, it's one of the swings that I have been in, a small cap swing, and not that here's the thing, I'm literally just show what I do, and you guys see the ups and downs of the portfolio here. I'm not, this portfolio that like the Webull portfolio is not a day trade portfolio. I might take some day trades here and there if I see opportunities, but I'm primarily not taking day trades in that. Ideally, I want to open another account with TradeZero for that, and I'll probably do that soon, but that's another whole story. I've been noticing NSPR, a lot of insider buys. Look at this. So you go back here. So from this kind of point up, from the 18th of November up, which, about 2 weeks now, we have been seeing just insider buy after buy. So director right here, all these directors, or at least 2 directors, have been buying heavily insider buys. And we see that an increase in their ownership of, 30% for, looks like Gary Rubin. And then for Paul Stuka, we have an increase in 48%, and then an increase in 29% on top of that, and then an increase in 1, 26, and a 12. So Paul's been buying heavy. He currently owns 115,000 shares. Decent amount of money in this stock. He owns a couple $100,000 worth, right? And Gary's got same deal. Gary's got 112,000 shares, a decent amount, and buying more. So that's usually a good sign in terms of people who are inside the company. Now, of course, right? People see this as like insider trading. Now, maybe it is, but it's also not, because you can do this. You have to just kind of disclose that you're doing this. Now, when it comes to insider trading, if they're doing that and telling somebody, hey, we have a really good, press release coming out tomorrow, buy, that's obviously illegal. But am I expecting a press release coming out tomorrow that's going to be really positive? No, but if they know kind of the inner workings of the company and say, hey, no, we're actually doing really well, we're progressing, our next couple of earnings are going to be fire earnings, that's kind of the reason why you would do that, right? Or for some reason, right? Maybe not. Maybe they're just kind of stashing money there. I don't know. But you wouldn't be putting in that much money out of your own pocket, right, into this company if you didn't think that it was going to go up, right? So it's interesting to look at. Also, ELYS is one I've been noticing a lot. Gold Street Capital has been buying a decent chunk. Not really. They've been buying, 30,000 shares, 55,000 shares, but they have a ton. I mean, they have 4.6 million shares. So it's not making a dent in their position size. Now, it's good to see that they've been buying in the past couple of weeks, right? Past 2 weeks they've been buying. It's good to see in the mid to low threes. But again, I mean, they already have a lot of shares, so I'm not really too okay, it's not a big deal. When I see somebody increasing their position by 25, 50%, that's substantial, because now they're doubling down. They for whatever reason, right? They believe in this. They're buying more, right? I like to see that. So let's go to ELYS. I don't have any right now, but it's one of those stocks I love. I think it's a $10 stock at some point, but again, market's been super, super gross for it, right? So ELYS, I'm going to have to pick something up here. It's definitely one that'll be high on my list, as when we start to see bottoms coming in for small caps, you almost can guarantee I'll be in ELYS. I guarantee it. And I'll be there for a ride back up into the upper fours, maybe $5. And that would be a reasonable target on this thing, as it has come down so much up into this range, 40% move, and then, taking profits. And then we'll see what happens after that. We're just definitely going to make sure that we don't get caught up in the euphoria. Obviously I don't generally do. I missed out, to be honest, so much over the pandemic kind of run, because literally that, I didn't hold stuff long enough. I didn't size in heavy enough. I was kind of too conditioned with the prior, year or whatever, how long I was trading the penny stocks, that I sold every spike. I made sure to take profits pretty quickly and proactively, and that was it. So I missed out on making some major gains. Now, maybe that's what somewhat helped me prevent from losing, more money the past couple of months, right? But, we'll see. Let's look at the after hours. Anything moving in after hours? Let's take a look at the top gainers. Give that a second on the right-hand side to load up. Let's see. NVOS is one other one. Actually, this is kind of curling a little bit too. Let's see what we got going on here. A little bit of volume popped up today and dumped back down. Okay. Kathy has 12 to 24 months. We'll see what happens. If those stocks are not recovering, I mean, she's going to be down bad. But we'll see. I mean, she's still got plenty of time. Whenever Weeble's laggy, yes. I mean, generally speaking, yes. I have noticed though, at least a little bit, when you start messing around with certain time frames and you kind of like move the cursor a little bit, sometimes it'll lag, but it hasn't. It's something that if I reset or I like close out of the app and I open it up again, it goes away. So I mean, it hasn't been really a big issue for me. But see the middle finger on the Mara chart. Let's take a look at this. Let's pull it up on. It got held up in the close. Yeah, look at that. There's your middle finger. Nice one. There's your little knuckle. There's your middle finger. And here we come back down. Let's see if the arm is kind of built in or how that works out. Next. I'm holding a little bit of the Lucid short still. I think we're going to probably come down to the lower 40s, but we'll see. I've been missing out. I haven't held my shorts, to be honest, as long. DDS is another one. Oh, was it a short? I mean, look at this. I had share short up at 405. I mean, I literally almost timed the top perfectly. And I got those shares short on pre-market on the 24th because they had their ex-dividend date. They had their special dividend of like $15 per share or something like that to shareholders, right? Which is pretty crazy. And I was like, okay, well, once people are in and locked in to get that, what's the incentive to hold the stock anymore? The stock's up like, tremendously since, this year. And Dillard's, I mean, I know they've done well in their earnings, but like, come on. I mean, really? And we're seeing the backside. I mean, I probably could have played puts. Again, another opportunity where I've had a nice short, but I didn't capitalize as much as I could have because I didn't play puts. So that's the next step, I guess. I want to start at least taking, maybe I'll take a short and then I'll add puts as well. I'll add like one put small and then we'll kind of let that play out. And then maybe, we'll see. But that's kind of what's been going on. This thing from where I was in, this thing is down 40%. Wild, but I covered most of mine in the 300s, in the low 300s is what it is. Let's see, SPY at the end of the day here. Yeah, so I mean, 454. Why do I have this line? Let's take a look if I can find why I have this line here at 454. It was kind of the top of this consolidation. Oh yeah, I know why. 454 was the prior all-time high in September. So that's a key level. We get back up over that level, we're probably going back to all-time highs at some point in the next couple of months. I wouldn't necessarily say it's going to just immediately, flip back to all-time highs, but that was the prior high, 454. So clearing over that level will be key on the S&P, and then we'll see what happens from there. But I mean, I don't know. That's something that I'll be watching at least into next week, and then we'll go from there. I have 455 calls, kind of a speculative, play buying the fear, but we will see. I also wanted to look at something else. What do I want to look at? What's max pain on SPY? I mean, I think honestly, max pain on SPY, we honestly need to flush out sub 445. We had to flush out pretty big, but I don't know. I don't think we might not flush that far. We may have bottomed for now. So based on how we closed, I wouldn't be surprised if we open up like massive, or not massive green, but the way things have been going, I wouldn't be surprised if we open up pretty green on Monday next week and have a really nice, start to the week. Just from what's happening. I would love to see that not happen and have a slow grinder kind of maybe like next week still finishing in the mid 400s and then there you go, right? But it's just been the way the market's been. It's been kind of whipsaw up and down, right? So $10 range on SPY intraday is nuts. You usually don't see that stuff. 420.69 is the max pay. I mean, that's like just under where we would see, let's see, that would be from where we are right now. That would bring you down to roughly like right here, which is about 7% more down, which isn't really even that much. I don't know. But I think overall, we kind of saw that the headlines, right? The virus, I think the virus variant stuff, I don't know. I'm not a scientist, doctor, but here's the deal. From what I've seen in front of us right now, every new, you're going to see cases, you're going to see more cases, you're going to see, it's going to be like, oh my gosh, everyone's got it now. Okay, yeah, because it's literally the new variant, right? It's spreading. It's just like the virus, right? So it's winter. We expect that. Flus, just colds in general, right? That stuff is elevated in the winter anyway. So we think we can all expect more viruses in the winter. I don't think that is why the markets are down. I really don't think that's why it's down, because we already now in place have so many more things than we had this time last year, right? To protect, prevent, to handle that stuff so much better, because we've been dealing it for a year and a half. So I don't think we're going to see that this virus fear is going to get any worse unless it was some extremely deadly thing that all of a sudden people are dropping dead as they're walking down the street. Like that, then okay, then that's fear. So then I can see what's going on. What do we do? Sell all my stocks. I mean, I don't know, I guess that's what people do, right? But for now, I just literally don't see that as being why the market's down. I think that is a headline to mask the Fed, all that stuff going on, the economy, inflation. I think it's masking all the underlying economic factors that ultimately, right, we're seeing and ultimately are driving the markets down, right? That's kind of what I think is happening. And I think that's a fair assumption to have. And really, you notice market can do what it's going to do whenever it wants to do it. Headlines just kind of mask moves is what it seems like, really. Somehow I feel like I'm picking pennies in front of a freight train. Yeah. Yes, I totally agree with you there. I thought about Mara puts. I did, but I'm not going to, I don't know. I'm not going to mess with it. We'll see how Bitcoin does this weekend. I'm personally going to stay away from the Mara puts because Bitcoin may kind of balance with the market, and it seems like the market closed strong. But I would expect that, the market's closed, Bitcoin may, tumble a little bit this weekend. We'll see, though. Let's look at the 5-minute chart. Yeah, see how it kind of pushed down hard, and now it's trying to get back. It's maybe, who knows? You also got to notice that each of the past couple of moves up are followed by like a pretty big pullback. So Bitcoin hit those all-time highs early this year, pulled back into the summer months, right? And was downtrending, and then it had a little pull right here down to like just under 30K, and then ripped for the next leg. Same thing here, kind of pushed up to like 52, pulled back down to 41,000, and then ripped for the next leg. So now we pulled back down to the low 50s, and is that the point of, now we're going to rip to the next leg? I mean, that's kind of been the pattern. I personally wouldn't be surprised if the top is in for now, for this year, for into, early next year. But I also just as well wouldn't be surprised if we bounce back and go higher and hit 100K by the end of this year, or like in January or February. I don't know. I have some Bitcoin exposure, and I'm fine with holding what I have. I have it in some other accounts. There should be a link below. If not this video, there's other videos. I've been using Vault lately. They pay like super high interest. It's similar to BlockFi. They have a really cool like trading platform as well when it comes to crypto, but I've been using Vault. There should be a link below some of my videos, or at least the last videos, if you're interested in checking it out. But that's what I've been using for holding my crypto there. But again, you can hold it wherever you want. I would just recommend, if you're going to hold it long term, put it in a place where you're going to earn interest on it, and high interest. So it's helping you with inflation and also the volatility in the underlying asset. So if Bitcoin's so wild, but you're earning 10%, or you're earning 5%, or 6%, or 7%, whatever it is. I forget exactly the numbers. They're always slightly changing. When some of the stable coins earn 12%, at least you're hedging yourself that way. So Dow reversed 1,000 points when it was announced. Look at the Dow. Here's the Dow ETF. Dow actually came back really nice. And I think a lot of the thing with the Dow, look at the volume too. Let's take a look at travel. Let's look at Jets, how Jets finished up. See how travel finished up towards the end of the day. Not as bad. It was worse. Yeah, it kind of pushed up. Let's see, like JetBlue. I have JetBlue calls for 2023. Yeah, push a little bit, some good volume there. I've been also looking at some of this, just kind of looking at some of the call option activity. Look at this. Where is it? Save. Spirit Airlines. Look at these. So I was just checking out, and this is looking at the chart for the options, which is kind of weird, but it's super like not clean to look at. But I noticed on Save that 11,000 calls on the 26th, 11,000 calls for January 2023 were bought. On this is for Spirit Airlines. And the next day, let's see how many volume, about 1,800 were bought. After that, 500. After that, 300. Today, 41. Prior to that, 17, 7 in one day. So somebody absolutely loaded the boat with 11,000 Save calls. Now, at the time, these were like $5. So do the math on buying 11,000 options worth $5 a contract. I mean, I don't know what the math on that is. It's nuts. So somebody absolutely loaded that up. And these expire in, a year plus. So, they got plenty of time. And if Save recovers back to where it was, earlier this year, right? This option could, 2-3x quickly, right? If this recovers back up into the 20s, right? This is going to be a 200-300% option, which is why I'm in it. But also look at Save's chart. Realistically, right, to get back to that point, you got to go back to $40. You got to double. Well, I mean, I don't know if that's going to happen. I don't think that's going to happen, but I wouldn't be surprised if you get back up into like the 30 range, which is still a pretty big move, and the options will still probably 50 to 100 or go up 50 to 100%. So, I mean, if you can do that, where you can take, let's say, a 40% move in the stock gets you 100% move in the options, well, I mean, that's why you take the options, so you can make more money. So somebody loaded it up. I don't know who, but somebody did. So I was just kind of watching that and I noticed it and I thought it was interesting. Let's see if there's any action in the after hours today. Look at this. What is this? LIXT is gotten destroyed. CNFR. I'm trying to see if there's any like actual volume. Some of these things are just kind of like 1 or 2 shares that are bought. Not really. And so we've been kind of just quiet. But I think you're going to see if a lot of funds are taking their losses, and we got the tax loss harvesting going on, all that stuff into like early December. I mean, you could see an insane period of time that Christmas or that Santa rally between like Christmas and New Year's could be just a wild, wild west. Like this penny stocks could go nuts because right now it's all the funds, the big money is coming back in and positioning themselves in these super, destroyed, valued stocks that they see 10, 20, 30, 40, 100% upside on. And then the algorithms turn back on because the algorithms are what drives like 80% of the market, right? So we have to understand that it's not me buying a share from you and, your friend or your whatever, or a guy at a desk at a fund. No, it's literally algorithms that are running this stuff. So when the algorithms come back on, they start ticking things back up rather than down, or when we get some good news and we get some good, price action, or we get some good news on some stocks, they can go 100, 200% because they've been beaten down so much that gets you back closer to maybe a fair value, or that gets you back up to kind of maybe where it was just trading at a couple of weeks ago or a couple months ago. Maybe not fair value, maybe gets you back up to kind of where it was trading at. And, then it becomes the game of the short squeeze and playing both sides and understanding what's going on. So that's probably all going to happen again. I wouldn't be surprised. And this is December and January is generally a period of time for that. And maybe the bigger overarching picture was that because people made so much money, I would imagine that funds did the same in early part of this year, right? Because they made so much money and then they made a lot of money shorting these stocks back to the downside. Because of that, the tax loss harvesting needs to be a little more, it needs to be a little more intense because they got a lot of gains to write off, right? They got to write off more in taxes so they don't have to pay as much on their gains. So maybe that's the idea, right? That's why we're seeing such a crazy, hard sell-off in some small caps. There's a lot of reasons. I think that's certainly one of them right there. So we'll see. Let's see. Buy and dip on Riot. I personally, I don't know. I'll wait on that stuff. Maybe it's worth it. But what site do I get my stock news from? Honestly, a lot of sites. I use some of the groups. I have a group. One of the groups that I have. I'm in Investors Underground. I think I made a video a while back where I was like paying trading gurus. I bought that for a year. So honestly, they have a lot of people in there just posting news all the time. So I see kind of stuff that's going on. But I'll pull up. Let's see. Let's go to Twitter. I use Twitter a lot for that type of purpose. So let's go to Twitter. Let's see. It's like Delta, or not Delta One. We have, what's it called? Let's see. Sometimes you'll see some news from investing.com. Let's see. I think it's investing.com posts some news. Let's see if I can find their account. It's gotta be this one right here, the verified one. They post some news. They try to be funny, but it's like, okay. Sometimes they'll see some headlines dropping here. I'll honestly use Twitter, to be honest, a lot of that, or I'll just kind of scan the Seeking Alpha is another one kind of to see, or even just CNBC, read the headlines and get a feel for that. Seeking Alpha, here it is, homepage. And you can go to, they'll have kind of trending news and stuff on this page. And so you can kind of get a feel for what's going on. I mean, there's not or you can use trade ideas. I tested out scans compared to trade ideas. I kind of like scans for the news filter. I didn't buy it because I have access to trade ideas through one of the groups I'm in. So I kind of use that. Trade ideas is a like live news scanner, and you can kind of sort by what headlines you want to see in terms of, does it pertain to the overall market, certain stocks, penny stocks, this stock, that stock. And so you can kind of like, that's what you can utilize that for. But honestly, I mean, I'm kind of just staying in tune with some of the groups that I am in, but like I just kind of have them up on the background sometimes, or I'll just kind of scroll through that, or I'll scroll through headlines on sites like this, I'll scroll and I'll just kind of get a feel for what's going on, or I'll just I'll see it in stocks. Like if I notice, like for example, like DocuSign today, like I saw this thing was down massive in the after hours yesterday. So I go look up the news, and that was it. And I go figure out what happened. I go to their page. I go to like Twitter, and I'll go like just type in on Twitter, which is, I think, is super underutilized, like Docu, type in their ticker symbol, boom, search it up, top posts right here will give you a really good idea for their earnings, and someone, has their earnings right here. You can read through right here, boom. Or at least that was for a bunch of stocks. Here's DocuSign, right? So here's a quick little paragraph. And then you can also, if you go to the latest post, you can get a really good feel for what people are doing. So I don't like it when everyone's kind of on one side. I want to be making sure I'm looking both ways so I can get information here. If I can see people are, okay, someone posted some unusual options activity, somebody posted this or somebody posted that, you get a good feel for it, and then you can kind of understand quickly what's going on. Maybe it leads you to another stock or another idea or from here to there, and then boom. Just like that, you're off to the races and running. So it's not like I don't know. It's not like there's one-stop shop. Finviz is another one as well. Finviz.com is free. I'll check out this always to get a good feel for the overall market. Webull has this too, by the way. Webull, if you go to Webull's page, you go to the markets tab on the left, you'll have their kind of heat map as well, and they have a news streamer up here. So you can kind of see their news streamer. Now, some of the stuff is like super random, and there's like absolutely no need to look at this or even see some of this stuff, but some of the stuff could be useful, so you could look at the news streamer there. A lot of free places to go. If you're going to pay for news, you'd be paying for like up-to-date information in terms of, okay, I'm getting I'm getting a literal live feed of when a company releases a press release to the news wires, and I want to get that the second I get it. And if I'm going to do that, I'm going to use like Trade Ideas or Scans, or there's Benzinga Pro, and you got to pay for it. It's like over $100 a month for some of these platforms, but if you're an active trader, then you trade off of those headlines, then it's useful and you're going to probably make money off of that. So you pay for it, right? So it depends. It really depends. But if you're someone who's like a swing trader or just an investor, everyday person, like you don't need to do that, right? You really don't. Personally, I have access to some of that stuff, but I don't even need it. Like I don't mostly for my swings, I don't use it. I really don't. Let's see. ABCL trying to move. Let's go back to this and then we'll wrap things up. Top gainers in the after hours. We have not much action. I mean, it's just like very low volume action across the board here in the after hours. It's been like a very kind of desert environment. It really has for a lot of these things. Yeah. But that said, I'm going to wrap things up. So there you guys have it. So essentially what we've seen recap. We talked about throughout the live stream. I figured that while the market's kind of super wild, I had time. Why not do it? We literally are seeing just the retail traders giving up. That's what you're seeing. Like AMC, you're seeing a lot of these stocks. People are just giving up, and so when people are just giving up, it's presenting a lot of opportunities. So I think there's going to be some really good opportunities on the backside. We're seeing tax loss harvesting. We're seeing funds just dumping positions because they can rebuy them in a couple weeks, or they can rebuy them tomorrow if they wanted to, or not tomorrow, but Monday, if they wanted to, and they could realize their loss, write that off against their taxes for this year, and then they'll ride that stock back up and make more money on it. So that's kind of how people do it. But I appreciate you guys for tuning in. We'll see what happens. Stay tuned for tomorrow's video. We'll be diving into the portfolio, some updates. Where it's sitting, it was down. It was down this week because I got the airlines, you got the long-term options, and I have what else? Small caps. It's down, right? But I pulled and I freed up some more cash, so I have a good amount of cash that we can play with, and I'm looking to utilize that in the coming weeks. So we'll see how that plays out, but that's the plan. So thanks so much. Hit the thumbs up button. Consider subscribing. Webull's promotion: 2 free stocks, $5 in free crypto when you sign up to the platform and deposit any amount. That's this platform. Check it out if you want to. Get some free stocks. Other free stock links down below as well. So check it out. Thanks for watching. We'll see you guys in the next one. Peace.